Okay, so I want to welcome everyone to our Tradestation Follow webinar. This is Manish Patel from Ichimoku Trade and AlertTrades.com. Even though this is supposed to be a follow-up webinar, we're actually going to go for everything we did in the Tradestation launch that we did last week. And the reason being is that unfortunately we haven't been able to get the recording link from Tradestation as of right now. I know you guys have emailed me for it, but we haven't got that yet. As soon as we do get it, we will send it out to you guys. But also, we only had 30 minutes to 45 minutes to go for everything, which is really not much ample time at all. So the whole idea of this webinar is that we're going to go for everything we did in the launch webinar. Plus, we will go for a lot more too. The things that we really want to get to is the trading part. How you could use the IMTF indicator for trading for both bullish, bearish setups, breakouts, pullback, and so forth. So we're going to go for a lot of, go for the tutorial in the workshop, and then what we're going to do is we're going to go for a lot of live trades I've taken in the past, trades I've taken today, and so forth. Okay. One of the main questions we're always getting, and we're still getting right now, will this be recorded? Yes, we will be recorded, and we will send you guys the link. We haven't posted this on the website, but what we've been doing is everyone that registered for the webinar, we will send a follow-up email, and the recording typically takes about 12 hours to convert everything. So tomorrow, hopefully by 12 o'clock Eastern Standard Time, the recording will be available, and then at that point we'll send it out to everyone there. Okay. So, and as soon as we get the Tradestation webinar recording from Tradestation, we will send that link out too. But as of right now, I even pinged them today, I still don't have that, so I can't really do something I can't control since that was hosted by Tradestation. Okay, so let's begin. This webinar is dealing specifically with what we call our IMTF indicator. This is a new indicator that we launched on Tradestation. It's through the Tradestation App Store, and I'll go through all the details with you in just a moment, so please bear with me. The key thing is this indicator is something that we've been working on for 5+ years. It's something that believe it or not, is institutional based, and something that's we're basically making available for the retail world now. And I'll talk more about this now. You guys have heard me, if you heard me speak in the past, you've heard me talk about multiple time frame analysis, how important it is. We've also gone through the steps of showing you how to do multiple time frame support resistances with the Ichimoku indicator, and we've done that for the last couple of years. The good thing now is that you don't need to go for all those calculations or look for the different time frames at all. We're pretty much going to do everything for you now and show you everything visually. So one of the things that we did in 2017 is that we've actually taken everything, our calculations, formulas, everything, and we pretty much gone visually, so traders now can see visually where the key support resistances are, which are based on multiple time frames. Also, you're going to be able to see where the bullish setup zones are, the bearish setup zones, and so forth. So we're going to give you all the details that you need in order to put trades on, from order entries to money management and so forth visually. Okay, so let's begin the webinar. As normally, we go for our disclaimer. Disclaimer basically states this is for education use only. We're not soliciting a buyer or seller in a particular instrument at all. All the information is owned by EII Capital Group, cannot be distributed or copied without our written permission. We are broker neutral, so this presentation is specifically dealing with Tradestation, so everything you're going to see is dealing with Tradestation today. Okay? So what are we offering? As I mentioned to you, we've been talking about multiple time frame analysis and how key it is in order for you to be a successful, consistent trader. So today what we're going to do is we're going to show you visually how you could see all this information and how you could use it for trading. You could use it for trend trading, counter trend trading, reverse trading, and so forth. Also, you could use it for breakouts and pullbacks. Okay, so what are we offering? So let me tell you what we're offering in this webinar. We're going to show you exactly where the key support resistances are. Most people look at one time frame or two or three. We actually, believe it or not, the code in the back end is running a lot of high frequency machine code and behavioral finance code where we're actually in real time processing over 7 time frames at one time and trying to find the key support resistance values for all the traders, swing traders, and long-term traders. And I'll explain that in just a moment. But the key thing is that you're now going to be able to see visually where all the key support resistances on the screen. Okay, instead of you going to have to calculate it by going for different time frames. So by knowing that information, you now know where you could put pullback entries. Okay. Also, you know where basically reversals can take place. Okay, and we'll talk more about these as we move forward to some real charts. Next, you also could use these key support resistance values as targets, or what we call preserve mode, where you're going to take some profits in your position. So if you look at these past IMTF values, which are past key support resistance values, you could use them for targets, or actually you could use them for preserve mode where you can take some positions off. Okay, so this is very, very key, and we're going to show you how you could use that too. Okay. The second thing we're also offering is we're going to show you exactly where the setup zones are, bullish and bearish zones. These zones here are pretty much for trend trading. So this allows you to get into the institutional wave going bullish or going into the institutional wave going bearish. When we give you these setup zones, we're going to give you the exact breakout entry that you need to look at to enter. Okay, you're also going to know the pullback entry, which is from the IMTF support resistance values. And you're also going to know the trailing stops. We're going to give you a visual dot that'll show you exactly where the stop is always going to be. Okay, so between item 1 and 2, which we're going to go through in great detail, you're going to know exactly where to place your orders now. You don't have to need to go through any calculations at all. We're going to pretty much do everything for you visually and show you all that information. Okay, the key thing is, if you look here to the right, this pretty much applies for any instrument, any time frame, and any type of trader you are, whether you be a trend trader, a reversal-based trader, or a counter trader, or anything you want. When we get to the charts, we're going to show you trades from a tick level all the way up to 5 minute, 10 minutes, 15, 60 minutes, 240, daily and weekly. Okay, and we'll show you some live trades and so forth. Okay, now a couple of key things. This indicator is only going to be available for the Tradestation App Store. Okay, it's not going to be something that we're going to send you an ELD for at all. It's only going to be available on the App Store by invitation only. Okay. It's only going to be for charting, and the reason why is we are processing over 7 time frames at one time. It does take some time to do. There's no way we could pretty much do it in radar screen or in the scanner at all, because if you did, it will take hours to implement. So we pretty much make this available on charting only. Okay, it's available for version 9.5 and above. Unfortunately, it's not for 9.1 at all, and the reason why is we needed the latest technology in Tradestation development environment in order to do the multiple time frame analysis. Therefore, you have to be at 9.5 or above. In the future, if we do get the 9.1 working with the technology they had at the 9.1 level, then we will make that available too. But right now, it's pretty much available for 9.5 and above. Okay, there is a cost for this. It's not free. Believe it or not, it's cheap. It's not high cost at all. We're only charging $199 per year, which is a promotional fee. Okay, so this pretty much is for the support of the indicator and so forth. So what we did was we dropped this indicator price down drastically so everyone could start using it, playing around with it, and they could start using it for their trading. And I'll talk about this, whether it's a standalone indicator, whether you could use it for your existing system and so forth, and we'll talk about that in just a moment. Okay. Speed, okay, speed also depends on how much data you're loading. Remember, we are going to be analyzing everything from 1 minute all the way up to weekly, monthly, and daily for any instrument that you're doing. So the amount of data you're requesting can slow things down. Of course, Tradestation caches all the data. Once you have it in cache, it will move faster, but it does take some time to load up a chart when you first pull up a particular instrument. Okay, and that's the reason why we're doing the multiple time frame crunching at a tick level, which no one really does. Okay. So let's now go through the IMTF concept, the point number 1 that we talked about, which is the key support resistances out there. So most of you guys, if you think about it, you have your trading time frame. Some of you guys trade tick level, some people trade range charts, some people 5 minutes, 2 minutes, 3 minutes, 10, 30, 60, 120. It does not matter. But the key thing, the problem a lot of people are having in trying to find key support resistance values is that you have a trading time frame and you look on that particular trading time frame based on your technical analysis, whether it be moving averages, Ichimoku, RSIs, Bollinger Bands, person's pivots, it doesn't matter. You do your technical analysis, and based on your technical analysis, you find the key support resistance values for that particular time frame. Okay, a lot of traders don't look at the higher or lower, and if they do, they start getting confused. At most, if you look at the last couple of years when I traveled around to all the trading groups, at most people will look at 2 time frames, sometimes 3, but most people typically don't look more than 3 time frames for a key support resistance value. The problem in this scenario is that when you look at 1 time frame, you found the key support resistance value for that particular time frame. However, it may not be the institutional support resistance, and that's a problem. So a lot of times your trading system is accurate, but what can happen is the higher time frames could override you, or even the lower time frames could get you stopped out, and then it goes in your direction. So in order for you to be consistently profitable with a good win-loss ratio and a consistent reward-risk ratio, you have to have the ability to look at more than 1 time frame. Okay, and there, believe it or not, there's a direct relationship between the number of time frames you analyze to your reward risk. If you look at 1 time frame, then typically what happens is the maximum reward risk that you're going to get is 1-to-1. If you look at 3 time frames, then the maximum reward you're going to get typically is 3-to-1, and so forth. Okay, so this is being the problem a lot of people have. A lot of traders have sat there and tried to look at other time frames, but at some points they get confused. They really don't know sometimes when the higher time frame controls the lower, or the lower controls the higher, and it gets really confusing to a point a lot of people give up doing the multiple time frame analysis and stick to 1 time frame. Okay, you no longer have to worry about that issue. Reason why is we're going to do that for you. So let me explain how we're going to do that. So the IMTF technology, we have a trademark on it, basically means Ichimoku to multiple time frames. Okay, and what we've done is we've come out with 3 separate types of buckets, and we classified all the traders into 3 different zones. Okay, the very first zone is what we call the day traders. Okay, so if anyone that's trading a range chart, a tick level, 1 minute, 2 minutes, 3 minutes, 4 minutes, and 5 minutes, that's the lower half of the day traders. The middle half of the day traders are 6 minutes to 10 minutes, and then the 12 minutes to 50 minutes are the upper half. So in this bucket of day traders, we are literally analyzing everything from 1 minute up to 50 minutes, and what we're doing is we're analyzing all those time frames and see when all the day traders are thinking of the same support resistance level. When all the day traders come up with the same support resistance level, that's when we say that's a day trading support resistance level. If there's any discrepancies with any of these day traders, then we're not going to basically say there's a day trading support resistance at all. So it does not matter what time frame you trade anymore as a day trader. You could trade a 1 minute, 10 minute, 30 minute. It does not matter to us. We're independent of that. And the reason why is we're looking to see when all the day traders are thinking the same way, and when they do, that's when we'll display the support resistance for the day traders. Now that's the first bucket. Okay. The second bucket is where we analyze the swing traders. On the swing trader side, we're looking at the 60 minutes, 2 hours, and 4 hours. Okay, and when we say there's a swing trader support resistance, that basically means the 60 minute, 2 hours, and 4 hours are thinking the same way and have the key support resistance level there. If they don't have the key support resistance level the same value, then we're not going to show you that value at all, and we're going to say the day traders don't have a key support resistance level at all. The third bucket is going to be the long-term traders, where we're analyzing daily, weekly, monthly. And again, we're going to analyze them to make sure they're thinking the same way. Okay, so we have three different buckets here. So literally our code on the back end is literally analyzing everything from 1 minute up to a monthly time frame at a tick level on real time for various instruments out there. Okay, so that's a lot of processing power we're going through if you think about it. Okay, now what we've done is we analyze all this data, and then what we're going to simplify things into two different buckets that you now could use. The very first bucket is basically when the day traders and swing traders are thinking the same way. So this first bucket is basically going to tell you when all the day traders and swing traders are thinking the same way. If they have the same support or same resistance level, then we're going to display a particular object on the chart that will tell you exactly where the day trader and swing trader support resistance level is going to be. Okay? The second bucket we're going to give you is a swing trader and long term. So this is when all the swing traders and long-term traders are thinking the same way, and when that happens, we're also going to display a different type of object for that on a chart that will show you the exact support resistance level for there. So between these two buckets here, we basically cover all three types of traders here. And if you get a scenario where both of these buckets exist at the same price level, that tells you all the day traders, swing traders, and long-term traders are thinking the exact same support resistance level, and that's a major support resistance level that's basically going to be maintaining the sentiment for that particular instrument. Okay? And that's what we're looking for. So now, how do we display these items? So let's show you visually how we're going to represent these levels. If you have a day trading swing support resistance level that matches across all the day traders and swing traders, what we're going to do is visually show you a dot, a purple dot on the screen. Okay, now in the Tradestation indicator, you could change the colors, you could change the thickness, all that stuff. I'll show you how to do that a little later, but right now the standard default settings is that anything that has all the key support resistance levels where the day traders and swing traders are thinking the same way is going to be basically represented through a purple dot. Okay, the swing traders and the long-term traders basically are going to be represented through a black cross. So between a purple dot and the black cross, that's going to show you all the key support resistance levels for the various different types of traders out there, independent of whatever instrument you trade, independent whatever trading time frame you trade at all. Okay? Now, what are the probabilities and how do you use this? Let's go through that real fast. Okay, let's say I'm a day trader where I'm trading anything from 1 minute tick level, 1 minute up to 30 minutes, 60 minutes, and so forth. Okay, if I'm a day trader, then what I'm looking for is a day swing. Okay, and at that point, if I have a dot, that basically means the key support resistance levels, the day traders and swing traders are basically thinking the same way. If I'm a day trader and have a dot on my screen on my chart, that means I have an average probability. Okay, that means it's higher than a single time frame that you typically use to trade, but it's average probability for us. If you have a cross, that means it's a high probability. Why? A cross basically means that's a key support resistance level for the swing traders and long-term traders. If you're on a day trading time frame and you have a cross, that basically you could now see the long-term support resistances. And if you're basically buy or sell at these pretty much long-term support resistance levels, as a day trader, that's a higher probability because you're trading in the direction of the higher time frames, which also gives you a high probability. Okay, the only thing that's higher than that is if you have a scenario where you have a dot and cross at the same level. It could be exactly at the same level, or it could be off by a couple of points. If you have a dot or cross on the same bar, that tells you all the day traders, swing traders, and long-term traders are thinking the same way, and that is the highest probability for a key support resistance level. Okay, so If you have the ability to be patient and you're a conservative trader, you're always looking as a day trader for a dot and cross to exist on the same bar. Okay, if you're a little more aggressive, then what you're going to do is you're going to look for a cross at least on your day trading time frame. If you're extremely aggressive, where you want to go in for a lot of trades, then you're just going to look for a dot. Okay, so these are the three different levels that you have depending on what type of trader you are. There's a question, does the cross go from 60 minutes to weekly to 60? The cross, whenever it occurs, it'll display on any time frame that you're looking at. So if there's a cross that exists, it doesn't matter if you're on a 1 minute, 2 minutes, 5 minutes, 60 minutes, daily, weekly, it will automatically appear. Because remember, when we calculate the crosses and dots, they're independent of what trading time frame you're looking at. We are doing our calculations irrelevant of what trading time frame you're looking at. So those dots and the crosses will always appear from anything from a tick level to a weekly, monthly, quarterly, whatever you display. Okay? And basically, if you have a cross, that means all the swing traders and the long-term traders agree. That means it could be anything from a 60-minute all the way up to daily, weekly, monthly, and so forth. Okay. Now, if you're a swing trader, where you're trading basically 60 minutes, 120, 240, and then a little going into long-term, which is daily, weekly, here's how the probabilities work. If you have on your chart, as a swing trader, a dot, that means basically that's low probability. You are on a swing trading time frame, and a dot represents basically day traders in swing. So that's the lower end. So if you only have a dot, basically that's not a good support resistance level at all. It's low probability. Okay, the minimum you should be looking for is a cross. So if you get a cross, then that's average probability. Okay, but if you want to increase your probabilities and get the highest probabilities, you're always looking for a dot or cross, which basically represents an institutional support resistance level, where all three types of traders, the day traders, swing traders, and long-term, are thinking the same way. Okay, so this deals with your probabilities. Now, here's an example of a chart here. This is basically IBM on a 30-minute. I took a snapshot of, and you could see here, you could see these dots, these purple dots, they represent the day and swing supports. And then you could see the crosses that basically occur here, and you could see scenarios where the dots are right on top of the crosses, and that basically, at that price level there, that represents the key support resistance levels. Okay, now in this example you have two crosses, so believe it or not, there are two swing long-term IMTF levels very close to each other, but there are two of them on the same bar. So the one you choose to basically look to be a major institutional support is the one where the dot is at, because that's where all the day traders, swing traders, and long-term were thinking the same way. But you can have a scenario where you could have two dots on one bar or two crosses on one bar, and that's basically when two IMTF levels have matched up. The levels have matched up at two different levels, and they're probably close to each other, believe it or not. So it's like a little zone that you're getting for the IMTF levels. Okay, it doesn't occur often, but it does occur, so you need to be cautious of that. Okay, now we've gone through the dots and crosses. Okay, so you now know where the key support resistance levels are for pretty much any instrument, any time frame you trade. Remember, the dots represents day and swing, and the crosses basically represent swing and long term. Okay, the crosses are always the highest probability, believe it or not, compared to dots, since that's basically dealing with the higher time frames. Now that we have the key support resistance levels, now what we want to do is find out when do we buy, when do we sell, where's the setup zones. Okay, so what we've done here is we changed the background color. Now in here we have a white background color, so what we've done is we shaded this little area here green. So when there's a bullish setup, we're going to basically shade it green. It'll remain green as long as the setup exists. Once the setup's gone, that means basically it reversed or it broke out. If that occurs, then basically the setup is no longer valid. You no longer need to put a trade on, and basically at that point the shaded area will disappear. So you could see in here, basically there is a green shaded area from here to here, and this is basically where you had an opportunity where you could put a pullback trade or a breakout trade. Okay, and I'm going to explain that in great detail in just a moment. So between this green zone, this green represents bullish and basically means you could put a pullback or breakout trade at any point in this trade here. Okay, now let's go through the different types of trades you could put on. Okay, now if you look in here, we have different things in here. Okay, so one of the things we have is that these green dots. These green dots tell you what your initial conditional stop order would be. Okay, so this is where your stop order will be, whether you put a pullback or breakout trade. As you enter the trade, these green dots will move. So initially they're stationary because they're the price we haven't broken out, but the moment price breaks out, they'll move, so they'll become trailing stops. So these green dots represents the initial stop along with the trailing stop once you enter the trade. If you're a breakout trader, what will happen is when these green zoning comes up, these blue dots will automatically appear. If it's bullish, it'll appear above price. If it's bearish, it'll appear below the price. This is your breakout levels right there. So this is basically, if you're gonna if you're a breakout trader, this is basically where you put your buy stop order right there, which is basically showing you your breakout. Okay. If you're a pullback trader, then you're looking for the IMTF crosses and dots. Okay, so basically you look at the highest probabilities, dots and crosses. So as soon as this turn green, then what you're looking for is to place your pullback order, and you could see right here on this bar, from this bar on here, basically is where you had a dot and cross at the same level. So at that point you'll put a pullback trade there. Your initial stop would be here and moving forward. Okay, if you're a breakout trader, you're basically your buy entry would be here, your initial stop would be here, and once you enter the trade, the stops will start moving. Okay, now so this is basically on both scenarios here. You could see that basically if you did a pullback trade, you entered in this bar. If you missed it, there was another possible entry right there. So if you're a pullback trader on this IBM 30-minute, you'll be entering there. If you're a breakout trader, then basically what happens is right here is where you enter the trade, right there on this bar right there. The reason why is this is where your buy stop order was, and on this bar it basically triggered, and at that point there's your trailing stop is these green dots right there. Okay. Let's go for a bearish scenario. The bearish scenario is basically we're going to shade it red. Remember, you guys can change the colors of this at will. This is basically the bearish zone here, so this is when you could bet on it going down. Just like the bullish, you have a breakout dots here, which are blue. This is basically your sell stop order right here for breakout trades right there. And then you also have your trailing stop and your initial stop, which is these green dots right there. Okay, now this is US yen 30-minute. On this trade here, we didn't get any crosses. We did get some purple dots here. So if you're an aggressive trader where you want average probabilities, you could basically put a short order here at these purple dots here, and your stop would be there. Otherwise, you stick to breakout trades, which is pretty much right there. Okay. So that's basically the bearish setup. So we have shaded areas for basically both the bullish and bearish. So you guys could use that anytime you want. Okay. Let's move on. The other thing that we offer is overextension. We have a proprietary formula we've been using for years for overextension, and we're actually going to make that available in this indicator now too. So what's going to happen, let me explain what the overextensions are. If you get a red dot, which is below, if it's a red bar, if it's going down, then what you can see is a red dot right there. Then we have a yellow dot, which is basically medium overextension, and a black dot basically means extreme overextension. Okay, so here's the rules that we basically teach in our classes with overextension. If you got a red dot like you did here, that basically means you need to go to a lower time frame to manage the trade. Okay, if you get a black dot, that means you need to get out of the trade right away. If you got a yellow dot right here, that basically means you need to tighten up your stop. You cannot longer use the green dots here. You need to start tightening up your stops with some form of fashion, or you need to exit the trade, or you need to exit half your positions or 3/4 your positions. Okay, because it's getting medium overextension. It could get into extreme, but basically you need to start tightening up your stop at that point. So red basically means go to a lower time frame to manage the trade. Yellow means to tighten up your stop or exit some positions, and basically a black dot would mean get out of the trade. In this example here, when you got a red dot here, you go to a lower time frame. This is a 60-minute. For us, the lower time frame would be 30 minutes. So we'll go down to a 30-minute and use the green dots on that time frame. And basically, we will trail with the green dots on a 30-minute. And if you look, if we didn't get these red dots, whenever we got this black dot here, that basically means we would exit the trade. Okay? Hopefully that's simple for you guys. So basically, if you look at the order side, we basically are giving you a shaded entry for when basically you look to set up a trade for bullish or bearish. For breakouts, we have blue dots there with green dots for your trailing stop. For pullbacks, you have crosses and dots, the IMTF levels for pullback levels. So the only thing that we haven't discussed is basically where do we take our profits completely, or where do we take some positions off, and so forth. So we label them in two different levels. One is what we call targets, where you completely take the position off, or the other word that we use continuously for years is called preserve mode, where basically you tighten up your stop and where you could take 50 to 75% of your positions off. That's not supposed to be 875 to 75. Okay, so what we're going to do is we're going to use past IMTF levels, which are past dots or crosses, in order to determine the targets or the preserve mode level. Okay, so let me go through and give you some examples here. So here's an example here where basically, if you look at the current price here, price was going up. So, and this is the US yen spot currency on the monthly time frame. So if your long-term view is basically where the dollar's getting strong compared to the yen, and you're doing this, you basically saw a bottom here, you're going long, long, long. The question is, where is this thing going to stop? And if you look here at the past, you could see these black crosses here. Okay, these black crosses right there basically define a support level in the past. So these black crosses here was basically the same support it broke to start the downward trend. So what you're looking for is these price to at least get to these black crosses here, and that's where you would take your target off. So you could use this as a target, or you could use a preserve mode. So what we're doing is we're finding the past IMTF levels, dots and crosses that were major support resistance levels, and we're going to use them as targets or preserve mode for current trades. Okay, so this is the monthly chart for the US yen. Let me show you some other examples. This is basically US yen on a 60-minute, where basically you were betting on this going down because you had this red bearish zone here. You entered a trade here, and you could see here that it came to this level here. And if you look backwards into the past, you'll see these black crosses that basically were here. So if anything, you're looking for this to be a target. You could see that twice now is held at this level. The very first time was back here, right there, and then right here it also held at this level here. So this past IMTF level here is a major level that's been controlling the future support, which is basically at 112.70. Okay, so again, you're going to be using these past IMTF levels that are major as basically targets or preserve mode levels for all your trades. Here's another one. This is WDC, Western Digital. This thing, we've entered this trade. We've entered this with options. This was going up, up, up long term. here. We were trading this on the lower time frame, and basically you could see this is going up, up, up. And then the question comes down to is where is this going to? Well, there's a black support cross right here, right there, and then there's a black crosses right there. So these are two different levels where you could choose one to be a preserve mode, one to be a target, or you could just say this is enough for me to be a target, whichever may be the case. But we're basically looking for these past IMTF levels to determine support resistances moving forward. Okay? Now, we pretty much have discussed everything that you need in order to basically place a trade and everything. So let's go for the trading plan in great detail. And how do you use this, when you use this, and so forth. Can you use this with existing system from Fibonacci, Elite Wave, Ichimoku, Bollinger Bands, or anything like that? So these are questions that are probably running into you guys' minds right now. Is this a standalone system? Can it be used in conjunction with another system, and so forth? So let's address that, and let's go for the various trading plans that you have for both the bullish breakout and bearish breakout, and also the bullish pullback and bearish pullback, and also the bearish bullish pullback. So how do you use this? Option one is you could use your existing trading system and use these IMTF indicator for confirmation. So you could use the setup zones by themselves, or you could use the IMTF crosses and dots. So you could use any components. Either you could use both of them, the setup zones, along with all the dots for entry, or you could just use the dots and crosses, the IMTF levels, with your existing system. In the indicator, you could turn things on and off, so you could do that at will. So you could basically use the IMTF indicator as a confirmation for your existing system. Today I'm going to show you how you could use the IMTF indicator for Fibonacci, and also another technical system named Heikin Ashi. So I'll show you some real life trades that we've taken where basically you could see how you could use it as a confirmation for existing systems. Okay. Second thing you could use is you could use it with Ichimoku with IMTF. You guys know I'm a proponent for Ichimoku. Okay, so I'm going to show you exactly how you could use this with Ichimoku to basically to set up your trading plans and so forth. And the last option is you could use this indicator by itself in pure price action form. You'll see some charts in a minute where you could just use it in pure price action form, and you could see it's successful by itself too. You just got to trade the probabilities, but if you want to increase the probabilities, then you'll combine it with the Ichimoku or another technical system. Okay, so we've got charts and trades of all these three different types of scenarios, so we're going to go for the pros and cons in each one of them in just a moment with real life charts and real life trades. Okay, so let's go for the breakout rules in detail. So here's the breakout rules. First thing you're going to do is go to your trading time frame. Whatever trading time frame you look at, you like, go to that trading time frame. Once you go there, then you're going to wait for a shaded area to occur. Okay. Now you could use the shaded area from us, or you could use your technical system for the setup. You could combine them. You could use ours by itself, you could use yours and the shaded area setup zones, or you could just use your technical system. It doesn't matter to us. All you're looking for is a setup, a bullish or bearish setup to occur. Okay. Once that occurs, now you're ready to place a breakout order. When you place a breakout order, it's going to be at the blue dots. Okay. Now, the blue dots are a formula. There's no way anyone could sit there and program everything that covers to be exact formula. So the blue dots are a guideline where the breakout entry should be. So when you place your order at the blue dots, look backwards and make sure that your buy stop order or your sell stop order at the blue dots are not sitting on existing support resistances. If it is, if it's bullish, move it up a little higher. If it's bearish, move it down a little lower. Okay, so that's what it means, not on past. So make sure the blue dots are not sitting on existing support resistances. If so, just move it off just a little. Okay. Next, your conditional stop order for that entry will be at the green dots. Again, make sure that your conditional stop is not sitting on existing support resistances. If it is, move it off it. Then you apply your optimization rules. If you don't have any optimization rules, that's fine. Then you're going to trade the probabilities with dots and crosses and everything in our setup zones. If you have a technical system, whether it be person's pivots, Bollinger Bands, harmonics, Fibonacci, Elliott wave, it doesn't matter what it is. This is where you apply your optimization rules right here. Okay? If your optimization rules basically applied and they say you still enter the trade, then you move forward, you put your cancel alert at the conditional stop, and then you apply your money management and you're ready to go. These are your breakout rules. Pullback, very similar. You go to your trading time frame, you wait for a shaded area. You could wait for the shaded area or not, or you could use it with your technical system, or you could use your technical setup, whichever way you prefer. Then you put a pullback order at the IMTF dots or crosses where you went for all the combinations, so you should know what they are now. Okay. You put your conditional stop at the green dots, make sure it's not sitting on existing support resistances in the past. You apply your optimization rules here, and then you apply your money manager. So it's very simple now that what we've got. Okay. Now, if you have existing technical system and you want to optimize it with IMTF, what you're looking for is a setup in your technical system in our shaded area too. Okay, so if you get that scenario, that's a setup with two technical systems, which increases your probability. That's what you're looking for. Okay, now let's go for some examples. So here's an example of gold futures, and you can see this is a daily chart here. Okay, now on this daily chart here, this is pure price action here. I'm assuming this trader is a Fibonacci trader here, where basically price is going down here from this level right here. Okay, it's gone down to here, and now you're doing a pullback here. Okay, now this is a pullback here. You could see basically there's two levels it could pull back to, the 50% or the 61.8. Okay, now I drew from the pivot high to the pivot low. That's typically where I draw from. Some people draw from the opening or closing prices. It may vary. It doesn't matter. Okay, so most Fibonacci traders are going to place a trade here, or they may put a trade here at one of these levels here based on their rules and their trading plan. The problem sometimes is if you put your trade here at the 50%, then you got to stop has to be above the 61.8%. At that point, you're introducing a huge risk. If you put your order at the 61.8%, then basically if it stops at 50% and reverses, you never enter a trade. So this is the issue a lot of Fibonacci traders run into. Okay, what we're telling you now is that you could use the IMTF as a confirmation for your Fibonacci. Why and how do you do that? Once you get to the 50%, what you want to do is wait for dots and crosses to occur. Now, this is a daily time frame. So looking for a dot to occur is not wise at all, because that's a day trading scenario. So really what you need to do is wait for a cross to occur with a day trading scenario. So when it gets to your 50%, look for a cross to develop. If you don't get a cross, don't place the order at the 50%. In this scenario here, it got to the 50%, there was no cross. Then it got to 61.8%, there was no cross at all. So now you wait patiently. At the beginning of this bar right here, a cross had developed right there. At that point, you could see it was right at the 50% level right there. So this is where you'll place your trade right there. You could place your trade there, or you could place a breakout level at these blue dots right there. Okay, so if you're a Fibonacci trader or any technical system, you wait for your setup to occur, and then your system will tell you where the entry will occur. If you have a cross, then you enter. If you don't have a cross, then you need to wait for one. If you don't ever get one, you never enter the trade at all. Okay, now there's a question here. This is outside the shaded area. That's correct. Now I'll explain this to you. So if you look at these green dots, you guys see these green dots right there, okay? These green dots, remember I told you about these green dots, you want to make sure they're not sitting on existing support resistances. If you look backwards, they're right there. So these green dots are sitting on existing support resistance. So what happens is this shaded area went away because the system in the background thought you got stopped out, that it got to the green dots. Okay, so this is a scenario where this went up and then went down. Okay, so this is a shaded area. If there was a possibility of covering every type of scenario out there, then what would happen is that this will still remain a red shaded area in the scenario. So this is one of the scenarios, the exceptions that you don't get many times, but basically this is where these green dots were sitting on past support resistances. It got to that level and then bounced off there and went down. Okay, so in these scenarios, you don't have to look right here, even if after the shaded area, if you get this scenario, look for 1 or 2 bars after the shaded area, and if you start seeing that it held that level and then started going down, then basically means your dots were sitting on existing support resistance. Does that answer your question, Sam? Okay, so I always look 1 or 2 bars after the shaded area just for these type of scenarios here. Reason why, there's no formula out there that could basically cover and look at every support resistance level out there in the past. Okay, so there's no way we could do that. We have a formula that works majority of the time, but there's going to be some exceptions, and this is it. And this is one reason why I chose this example, because I know you guys would have asked that, and I wanted to cover that. Okay, now if you look here, let me zoom in. If you guys have a hard time seeing it, this is basically that same little level here zoomed in, and you could see when it got to 50% and the 61.8, you really didn't have a cross at all. Then you waited for it to go down, it broke the 50% level, and at that point pulled back. Notice there's a little shakeout here, a stop run on that bar right there. There was no cross. On the next bar, a cross is where it developed, and at that point you enter this trade, and you could see it basically retested low and kept on going down lower. Okay, so in here the steps that we followed was wait for Fibonacci retracement, wait for a cross dot to confirm, place order at the dot across. That's basically the rules that we followed here for this trade with Fibonacci along with the IMTF indicator. Okay, here's an example of where it didn't work and it kept you out of from losing. So in this trade here, this is basically the run here. You went all the way down here, okay? And then if you started pulling back here, if you do the pullback levels, there's your 50% and there's a 61.8% retracement, okay? So 50% retracement, a lot of Fibonacci traders are going to be placing orders here. Notice what happened. It went down and then reversed, so they would have lost. The other 50 Fibonacci traders are placing orders at the 61.8. They'll place an order here and look what happened. They lost. If you sat there and looked for crosses, then you'll notice that you never entered this trade at all. Why? When it got to the 50% here, there was no cross at all that developed in here. Okay? When it got to the 61.8, there was no cross that developed at all. So basically the system, if you use the IMTF indicator with the Fibonacci rules, that will basically confirm your entry, and at that point it kept you out of a losing trade. Okay? Yeah, Robert, you are. If it's a pullback order, you're going to be placing limit orders at the IMTF levels. If it's a breakout order, then it's a stop order for the breakout levels. Okay? So let's move on to some more charts. Now, this is Heikin Ashi. Some of you guys have seen this. Some of you guys have not seen Heikin Ashi. Heikin Ashi is a pure-based trending type of system that basically enhances Japanese candlesticks. So the way you could use this with a Heikin Ashi system is that basically you look for the shaded area here, okay? Over here. Once you get the shaded area, you could place pullbacks or breakouts. Here, since we're using a black background, I had changed my crosses to white, okay? And So what you do in Heikin Ashi is that you wait for a pullback to these crosses and make sure it's a Heikin Ashi indecision bar. If it is, then you basically enter the trade at these crosses. On the breakout bar, which is here, you make sure it's a Heikin Ashi strong candle. If it is, you basically enter the breakout trade and you stay in that trade following the Heikin Ashi rules to basically trail this up. So this is taking a Heikin Ashi system and basically now telling you when to enter and when to exit with the IMTF indicator. And it works really well for a lot of major trends, believe it or not. Okay? Now here's another trade here. And this is an interesting trade here. So let's talk about this trade here. So this is NTRS stock on a 60-minute. Okay? You had a green zone here. And you could see this green zone existed for a long, long time. You had crosses here, okay? Then you had dots above you. So there started becoming discrepancy where the swing traders were still thinking bullish because they had a support. Then you had these purple dots above you where the day traders are basically sitting there going against you and trying to take this thing down, okay? So there was conflict there. And basically what happened was the conflict occurred, and at that point you got to this level here. And the reason why you got to this level here is the green line moved and green dots moved up. At that point you had a green zone here basically went away. So by the time it pulled back to these crosses, it was no longer a green shaded area anymore at all. Okay? That means there was no setup on a 60-minute that you could take a trade on. However, if you looked in the higher time frame, there was a green shaded area in there. Reason why is it covers a lot of more of this consolidation pattern here. So my point in this trade here is that in here, if you get to these IMTF crosses and your shaded area goes away, look at one higher time frame. If you still have that shaded area in there, that basically is what the system's telling you is that you cannot take the trade off the 60-minute with the risk level off the 60. You have to take it off a higher time frame because you need more of a risk level due to the consolidation pattern that's occurred. Everyone okay? So in this trade here, if you stayed on the 60-minute, there'll be no trade. If you had gone to a 120-minute, then you would have set up trade where you could have entered this trade here and took it to these crosses right there. Okay? Here's the E-mini on the 512 tick level. Okay, the thing I want to show you here is a lot of you guys sit there and trade tick levels. It could be 512, 1600, and so forth. And in here, notice one thing. I have dots here. These are day and swing. Look how price respected these dots here. I'm going to show you a current chart of the E-mini today in a couple of minutes. This was taken a little while back ago, last week for the webinar. But you could see how well price respected these dots here. So the key thing is, if you're trading at tick level where you're scalping E-mini, Russell, Dow futures, or any of the future products, you could sit there and go down to tick level, and you could see the IMTF levels on all time frames above you very easily now. On the one today, you're going to see crosses along with dots, and so you no longer have to look at the higher time frame and see where those support resistance levels are. We're doing that for you, and we're going to show that to you. Okay, here's a 1600 tick level chart, and look at the zones here. You could see the wall of basically support resistance, these purple dots, and you could see how price is respecting them here. You could see when it broke down here, it broke this wall there, then it broke here but held here. You could see this consolidation pattern here holding that wall right there. Okay, so you could see this wall of support resistances, and you could key off them along with your technical system if you want. Okay, here's a 60-minute here. Now this one I love, and let me explain why. Okay, so in here you had a bearish setup here. Okay, never got to the breakout level, which is right there. So you had a bearish setup that existed, and then it failed. Because notice one thing, it went red, and then it failed. As soon as it failed, a couple of bars later, it set up for a green zone. Okay, and I look for these type of scenarios where you have one zone and then it changes color to another zone. And if you have that scenario, then all you do is put a breakout level. Look what happened on this breakout trade right there. It took off. Okay, this is what we call reverse trading, where basically one scenario failed and now it's setting up to go the other way. This is high probability if this occurs within a certain amount of time from one shaded area to another. So if you just look for shaded areas to change colors within a certain number of bars, that's a high probability reverse trade. Why? When this failed here, that told you it wanted to go bullish. When you have a bearish failure, two things can happen. Either it's going to enter a consolidation pattern or it's going to enter a bullish trend or reversal. So what you do is you look for the next setup right here, and the bullish setup occurred. If it breaks out, then you know it's going to be a bullish trend. If it never breaks out and then starts to go red, green, red, green, red, green, they're basically telling you it's going to consolidate. And what happens is the moment it breaks out in a shaded area, that's when it's going to break the consolidation pattern. So this is a great reverse trade here. And on social media, you'll start seeing a lot of trades from me that I've posted in the past, which talks about reverse trades. If you go back to those trades on social media I posted, you'll notice that there's a shaded area a couple of bars before that for me to sit there and look for it. This is proof that this wants to go the other way or consolidate. So all you have to do is set up a trade to go the other way, and it's a high probability to basically on that trade. Okay? Here's another trade here. This is crude oil. Now, on this trade here, we shorted crude oil. So look what happened here. You had a red shaded area here. We had crosses here on a 60-minute. That was a trade basically short. So we entered the trade here, right there. We shorted it here. So we enter this trade. We have a short. We're in this trade. Looks good, looks good. All of a sudden, these crosses get below us. We're in a short trade, and now all of a sudden, I have crosses below me. That's not good at all. So we instantly exit the trade. So we took our profits at these crosses. And luckily we did, because why? Look what happened. It reversed. Remember, in order to have a bearish trend, what happens? Resistances need to go down. Well, this resistance turned into a support below us, which was deadly for our trade. So we actually walked away with some money on this trade here, just barely enough right here. But the thing is, you don't care about what you walked away profitable. The key thing is that we didn't lose in this trade going up at all, because the IMTF dots basically reverse, and that was a clear indication that this trade was about to reverse on us. Okay? Small caps. As you guys know, January effect basically huge for small caps. Okay, so in January and February we trade a lot of small caps. I'm going to show you some of those. This is PLUG. You could see this is basically a 60-minute here. This basically went up. You can see the row of crosses in here in the setup zone here. So we basically enter this trade here. Now, the green dots here were right there. If you look back in the past, they're right on these crosses. So what we needed to do was our stop need to be just a little below that there, and notice it cleared us getting stopped out in that scenario. So we enter this trade here, and you could see it went up. Okay. Here's GM. This is a 60-minute. Now this is nasty. Reason why is this gapped. You can see the huge gap here. Okay, I like a lot in gaps. If you guys look on social media, we post gaps in the morning, and we look for these type of scenarios, especially on the lower time frames. So if you find a 30-minute or 60-minute and you find crosses, remember, that's high probability. So if you get a cross and dot at the same time, that's extreme high. In this scenario, we didn't get a dot and cross, we just got a cross. But look what happened here. It gapped up, and it basically broke this resistance here. That was basically a key thing to tell us that this thing does not want to go bearish at all, because it gapped, and when it gapped, it broke a resistance. So this has a high probability to be what you call gap and go. So what happened? It gapped up and then started come down. When it started coming down, notice these crosses never moved at all. These crosses never moved in the gap. That tells you the higher time frame support resistances were strong. So in here, we basically placed the order here. We did this with day trading options, believe it or not. We did that there, and you could see it broke out here. Now, this right here stopped right there. Why did it stop there? You can't see it, but if you scroll back, there was an IMTF cross right there in the past, and that's exactly why it stopped there. Okay. Here's a small cap stock, OTIV. You can see OTIV here. It really didn't pull back at all to anything here. It broke out. So this is a stock that broke out. Notice one thing. It broke out and then basically pulled back and then broke. These crosses were resistances. Okay. Then what happens is it broke the crosses, pulled back to the crosses, and then took off. So this is a scenario where you broke a resistance with the crosses, and then you pull back to the IMTF level here, which is a little higher. Since the crosses are going up, that tells you it's bullish too. You pull back. This is a trend continuation. Remember, these shaded areas are basically for pure trends, not trend continuations. In the future, we will be releasing an indicator for what we call counter trend and trend continuations. Okay, and when we do, this area right here would have been a green shaded area right there, and that would have been a trend continuation trade right there that you could have taken to keep on going up. Okay, here's another one here. And I love these type of scenarios here on trend continuations where all of a sudden you get this row of black crosses. Then all of a sudden you break them and you go up and you start pulling back. If you start pulling back, you got another row of crosses, and basically this is support now. Notice these crosses here are higher than the previous ones. So it tells you crosses are going up. That tells you key support levels are going up, and then you had proof that it does not want to go bearish because it didn't break down when it had a chance. And over here, you enter the trade here, and you could take this long as a trend continuation. So we're using these dots here, dots and crosses, for trend continuation trades. And they don't occur in the setup zones, but you could see scenarios here where you could enter trades just of crosses and dots by themselves. Okay, now let me go for some real world examples, which are basically trades from today. Here's some observations for you guys to make with this indicator. And this is something we already talked about. When you get failure in one setup zone, leads to either consolidation or reversal on the other side. If you just sit there, if you had a red zone that failed, when the green zone occurs, put an order at the breakout level, the blue dots, and see if it triggers. If it triggers, then you know it's going to go bullish. If it doesn't trigger, then you know it's going to consolidate. Same thing the other way. If a bullish zone fails, you look for a bearish setup. You put an order at the blue dots on the bearish setup and wait for entry. If it enters on the next red zone, then you know it's going to trend. If it doesn't enter on the next red zone and the red zone goes away, then you know it's going to consolidate. Okay? We already talked about that scenario already for some trades. Second, a shakeout. I'm going to give you an example of a shakeout. I love these things where the market makers or whoever the controlling the markets basically does a shakeout at a cross. Shakes out at a cross, but then closes right at the cross level or on the correct side. If you do, on the next bar, you could put an order right at the crosses and you could enter that trade and you get a high probability. And I'll show you an example of a trade we took with that in just a moment. Okay? Also, again, let me emphasize this over and over and over. Make sure your orders at the green dots and blue dots are not sitting on support resistances. If you do, you need to move them off. We're giving you some scenarios where you had that scenario and you needed to move them off. Okay? Now, here is a great trade here. So look at this trade here. You had a bearish zone here. Okay? This little spike here, the stop run right there, killed the bearish zone. But notice one thing. When this occurred, this little spike occurred, price was below the crosses before the spike. During the thing here, it closed right at the crosses here. Okay? All you needed to do was close at the crosses or below. This is what we call a shakeout. Okay? A stop run as you may occur. If you see that, then on the next bar, you could put an order right there at the crosses, and you could basically take it for a 3-to-1 reward risk ratio to retest the pivot low. We specifically look for these type of scenarios where you have a shaded area with crosses, you get shaken out, and then basically next bar, we look where that closes, next bar we put a trade on, and we basically get a 3-to-1 to retest that pivot low. Notice one thing, how fast did we get our 3-1? Very fast. That's what shakeouts can do. Shakeouts of volatility there, and this is how you could take volatility and turn it into money, to dollars. And how do you take volatility and take advantage of it? You look for it to occur, you look for the scenarios to occur, and then you take advantage of it. And that's what happens with this at all. So the rules for trading a shakeout are as follows. Look for a shaded area with row of crosses. Okay, once you have a shakeout, the shaded area will go. You look to see where price closed with the crosses. If it holds the crosses, then the next bar, place an order at the crosses, and you could retest the pivot low at that point right there. Okay, here's a trade. This is dollar futures from this morning. You can see I took this snapshot 8 o'clock here this morning. Look what happened in this. This is not a shakeout, but look what happened here. This occurred while we were sleeping. So we had a red shaded area here. This blue bar right there basically stopped the red shaded area. So price went above there. Okay. Now, in theory, this should either consolidate or go bullish because the bearish zone is gone. Instead, the next bar, it went below again. Okay. Went below the purple dots right there, which are the day and swing traders. It went below and then came back and held it. Look how many bars it held it for. Right there. So if you sat there and entered this trade here, you could have gone and made money to the pivot low. This is like a little shakeout. If you view this as a shakeout, well, it's a little not like a shakeout, but basically this was where it went up, stopped people out in the bearish trade, then the next bar came back all the way down, closed right back below the key support level, and then you pull back and you hold it for 2 or 3 bars, and then it takes off and goes down. Okay? So Robert asked a question, will you see a long candle wick on a shakeout? The key thing, Robert, is that trying to define long candle is very hard. What I would do is just stick to the idea, look for the shaded area, and if the shaded area goes away and it still holds the crosses, that's a shakeout. So I'm looking for the shaded area to go away. Because if you start defining the long candle, then you have to define it based on volatility, and then you're going to get into a nasty formula. Do you see that? Okay. Let's move on. Here's another trade here. This is dollar futures on a 60-minute here. You can see in the green shaded area here, it broke out, went up, retested the high, and then struggled to keep on going higher. Okay? But notice before this green shaded area, there was a wall of crosses here. Notice one thing. Bearish setup here. You had a bearish setup here that failed. Okay? Then it went above the crosses, held here, came up here, and then basically came above the cloud, Ichimoku cloud, into a bullish zone here and went. The whole reason why this trade had a high probability going bullish is that the red shaded area failed before it. And so basically all you have to do is put a breakout trade here. If this breakout trade did not occur, then this will consolidate at that point. Robert had a question, can you use this for iron condors? Well, Robin, think of it this way, okay? You're a trend trader in here, agreed? So you could use this as an iron condor, but you got to get the mouth of the iron condor correct. The iron condors are pretty much for trades that basically consolidate, don't they? Okay? So the way I would do it is that you need to find trades that consolidate. So what I would look for is a red shaded area that failed and then a green shaded area that failed. So if you get the red and green that fell very close to each other, then that indicates it's going to consolidate, and at that point I would probably try to put an iron condor on at that point if you get a good reward risk ratio. Okay? Now, Brad had a question. It says, do I still need to keep a 3-to-1 reward risk ratio on your trades? Is it built into the system? Brett, I always maintain a 3-to-1. That's the only way you could be consistently profitable. Does the system build in 3-to-1? No, not right now. Okay, this has shaded areas in here. You still have to apply the money management and everything. These are not what we call optimized in there. And the reason why is we basically came out with these standalones to show everything, and then you could use the existing system to optimize it. In the future, we will be coming out with optimized shaded zones where we're automatically going to optimize everything for you without you having to have any technical system out there, and we'll be looking for the 3-to-1 and so forth in those too. But right now, these baseline, we don't have them in there yet. Okay. This is Hasbro. Here, you guys could see this here. You can see this. Now, look in here. This is Hasbro. This is what I was talking about. You have a red shaded area. It never broke out. Then you have a green shaded area. Never broke out. Now, that basically indicates that this is going to consolidate. So next, you have a red shaded area. It never broke out. Until you have a shaded area that breaks out, this will continue to consolidate. So Robin, this is a scenario here. After you know that this green shaded area disappears here, you can look at an iron condor. You can look at an iron condor from here to the bottom here as basically being your levels for the iron condor. If you get a 3-to-1, then you're really good to move forward from. Okay. Siam asked, is there it'd be a good This is another trade here. This is a great one here because look what happened on the Euro USD. On the Euro USD over this morning while we were sleeping, this broke out, got to the crosses, and then bounced off the crosses. This is really good in that you actually see, this is what we call zone playing in day trading mode, where you have a bullish setup, but you could automatically see the higher time frame resistances on your same chart, so you know exactly where to get out. So you enter this trade here, and you know exactly where to get out at the black crosses right there. This is the Euro New Zealand. This is one of the hottest currencies right now. On a 240 minute, look what happened here. You had a red zone here that failed. Then you had the next zone that came up was green. You place the order at the blue dots here. This broke out, and you could look at it. You're still in this trade here, okay? But no, you're not. If you look at these overextension dots right there, you basically got out at this point right here. This black dot right there is where you got out. Now this consolidated, and then this is a trend continuation go up. So if you wanted to play for the overextension, you could, and just ignore them, and you could trade it that way. Okay, if you look at it, if you ignore the overextension, you're still in this trade, and you could see the dots are right there. Okay, and you could see the purple dots are going up, up, up. So these day traders are holding this thing going up, up, up. This is one we talked about and we blogged about, I think, 2 days ago. So this is NWSA. Basically, we caught some unusual option activity on this guy, which is, I think, 3 or 4 months out, where someone was buying a mass number of puts for this guy. Okay, and if you look at the weekly time frame here, this is a trend going down. And if you look here, this is a Fibonacci retracement to 61.8% right there. Okay, it was confirmed on this week right there, which is 3 weeks ago. You had a cross right there. So 3 weeks ago you had a cross right there, and if you placed the order at the cross or even at the 61% above there, you would have entered this week, and you could see it's going down right now. So this is a trade right here at 1330. You basically would have shorted this there, and what you're trying to do is play at least to these black crosses right there, which is roughly about 1166. So you're looking for little less than $2 move on a $13 stock, which is pretty big. This is one we blogged about and going down, but you could see that the option trader bought a whole bunch of 11 puts. I think it was 11 puts, which are I think out to May or June or something like that. So this option trader is looking for it to retest this low right there by that amount of time, and he bought those options cheap, but he bought a huge number of them. So this is a great opportunity going down. It went down today too for this particular instrument. If you go to our blog on our website, you guys could see the details of this trade step by step. Okay, this is Urban Outfitters. If you guys notice, Urban Outfitters here, this is had earnings here, and you guys could see Urban Outfitters basically right before earnings, right on earnings, you had a bear set up here, and you could see right there, even this week where it has earnings right there, there's a cross right there. That's a resistance. So you could use this for a lot of earnings plays, believe it or not. In our Options University, we teach what we call pre-earnings, where you make a guess based on all your Ichimoku rules and stuff like that, the day of earnings or day before earnings, and basically predict which way it's going and put the correct option strategy on. So we go to weekly time frame and do that. This is one trade here. Basically, we looked at going short right there at that cross right there. Okay, this is crude oil today. Look at crude oil today. Look, crude oil on a daily time frame here. You guys know that crude oil broke $50 a barrel today. But notice one thing on the daily time frame. You had a bullish zone here. Okay, you had crosses here. This failed the crosses here and went below it. When these crosses developed, price was below it. So when these crosses developed here, basically that was a resistance. Those crosses are the major resistance that basically took down crude oil. And you could see that they were there 2 days in a row that occurred, and at that point basically took this thing down. And you could see now the crosses that it got to here and it's holding, these crosses right here, that cross right there is what it started to go up. This cross right there is a major support level for crude oil right there. If it breaks that, it's coming down to here. And you could see the levels of crude oil that are there. Okay. This is crude oil on a 60-minute. If that was the higher time frame, if you look at the 60-minute, you could see there was a setup automatically there for you for crude oil. Why? There's a shaded area here, red. You had a bullish shaded area that failed. Now you had a red shaded area here. Okay. You can't do a pullback at all. The reason why is you had two shaded areas that basically means it was going to consolidate. So the only thing you could do is do a breakout. So you have a breakout right there, and you could see that this thing went all the way down, got overextended at this point where you exit the trade right there. Okay? That's the current chart for crude oil, and that basically shows you the price action today when I took the snapshot. There's U.S. 30-year Treasury bonds. You guys could see this is on 240-minute. You had a bear zone here with major resistance crosses above you, and you could see it tanked there. Okay, this is a 10-minute. So if you like day trading U.S. 30-year Treasury bonds, this is basically a 10-minute here. You had the bear zone here, entered a breakout level right there, and you could see it tank from that point on with these blue dots, purple dots going down, 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 which basically mean resistances are going down. This is Apple. A lot of you guys are looking at Apple. Well, when did Apple take off? And did the system signaling? Well, notice one thing. You had a green shaded area here, and then you had a cross here that stopped it dead into the track from keep on going higher to the breakout level here. Then it came down. Right here the cross was above you. Right here the cross was basically right above you too. Okay, so this is where the crosses were resistances there. It's kind of hard to see with the crosses thick. This is the point right here. It broke the cross. That was proof right there that basically it was ready to go bullish. And you could see it never looked back at all going up. You could see right here, this is a buying opportunity where the crosses were basically support right there. But basically all you do is not even look for a pullback, just look for a breakout. Right there is where you had a breakout level right there on this bar right there, and you could see from that point on it's not looked back at all. That's a long-term view on Apple. Okay, this is Apple on a 5-minute. Look at the crosses here. You have these dots here that held Apple on a 5-minute, and then look what happened here on crosses. You could see these crosses here and see how price is respecting the dots and crosses here for day trading Apple. Okay, this is E-mini on a 512 today. Notice one thing. You have this row of purple dots here. Once it broke it, it went basically flying down. Then it came back here, broke the dots here, and now basically been sitting on top of those dots right there. Okay, now we pretty much have gone through everything there. So how do you get this indicator? What I'm going to do is I'm going to show you how you could get this indicator, and then I'm going to quickly show you some slides and go for the installation of the indicator and kind of help you with all the things, the issues you may run into and so forth. We do have a video on how to install it, but I want to make sure I go for it with you guys here. Okay, so indicator, if you want to purchase it, all you have to do is go to ichimokutrade.com/tradestation, and basically there's an order form there. There's a promotional price of $199. Basically this is the yearly rate for this. It's a promotional fee right now. Okay, this is limited time only, so if you're going to wait and it goes up, don't come crying to me at all. This is the limited time price only right there. Okay, how to install the indicator, it's right here, ichimokutrade.com/TS video. Okay, now if you have any questions, you can email us here. When you order the form, there's two things it's going to ask you for, is your client ID and network ID. We need those two pieces of information in order to activate you. Okay, now once we get the information, we will activate you. When you get activated, then what happens is Tradestation will send you an email which basically looks like this. The email will say exclusive access granted, blah blah blah, right there. Once you get this email, click on this URL right there when Tradestation's open. Once you click on it, then it will take you to the screen right here. Okay, when it takes you to the screen right here, click on accept. So this is giving you rights to the exclusive IMTF indicator right there. Okay, then it'll take you to this next screen where you have to sign their disclaimer. So click on X right there, click on accept, and at that point you now have access to everything here. Okay, so now what happens is you could click on these buttons here, go to my subscriptions, and what it'll do is automatically take you to your Tradestation app store, and you could basically click on it and it'll install it as a regular indicator for you along with a workspace. I'm going to show you that in just a moment. Okay, so let's come here and let's flip screens now. I'm going to take you to Tradestation. So here's Tradestation here. Okay, now if you look below, it says IMTF Indicator version 5. This is a workspace that will automatically be downloaded for you. Okay, in this workspace I've already given you 4 different time frames. Actually this is supposed to be 240, 240s. Let me change that real fast. Okay, 240. Okay, now this is not going to show you the Ichimoku that I just put that on for display purposes right now. In here, you'll see a 5-minute, 15-minute, 60 minutes, and 240 where I already did everything for you. Okay, and let me explain why in just a moment. Okay, so a couple of things you have to do. If you're using candlestick bars and your bars look a little distorted, you have to go to View, Chart Analysis Preferences, and this window here will appear. Okay, that window is not appearing. Hold on. Okay, it's not going to appear. But there's going to be a menu option in there, basically says repay candlesticks. Just choose that off. Okay. The other thing you need to do is once you come in here and you download this, all you do is click on right mouse key, insert analysis techniques. Can you guys see these screens at all? It's not even allowing you to see that. Okay, just the 4 charts is not showing you that. Okay, so I was hoping to go through and kind of go through some of the things on the video. This is all on the video, but you guys could see it, but it's not letting me do this for some reason. Let's try this. Nope. Sorry, bear with me one sec, guys. Let's do this. No, it's not going to let me do that. Okay. It's definitely not letting me do that. So I can't really go through and show these window options and stuff like that. The key thing here is that if you format these indicators, it tells you how many bars you go back and so forth. Okay. Actually, one thing I can do is I could cheat. So let me do this. Okay. So let me give you a, so if you go to chart analysis preferences, it's going to give you this little screen here I'm about to take a snapshot of. And I think I could do that. There we go. Okay, so it's going to give you a snapshot of here. See this little part right there? Okay, this right here, this option right there needs to be unchecked. Okay, so that's under chart preferences and stuff like that. So if your candlesticks looks distorted, make sure that's unchecked. Okay, so that one takes care of that. The other thing I want to show you is that when you format this chart, if you don't see dots or crosses, whoa, okay, oops, there we go. If you don't see dots or crosses here, okay, you guys should see my screens here. The key thing here is that this needs to be correct. The number of days backwards, okay? If you do not have that correct, then you're not going to see the correct days and so forth. If you're on a 5-minute, you got to have that set to 30 days back. If you set it to 500, you're not going to get dots or crosses. So if you ever add the indicator and for some reason you don't get dots or crosses, format your symbol and change it so it goes back 30 days. If you're on a 60-minute, make sure you go back 1 year, 2 years or so forth, or 15 years and all that stuff. Okay, so make sure that information is set correctly and you'll be fine. Okay, now let me do this. I know this is a little tedious, just bear with me. I'm going for these screenshots. I want to make sure this is there. Now what I'm going to do is I'm going to format the indicator and show you all the parameters that are there. So if you format the analysis technique and then you do format, there's all these menu options that appear. Okay. The menu options that appear are right there. Okay, so here's the menu. If you format the indicator, this is where the menu options appear. If you want to change the color of the bullish cloud, the shaded area, or the bearish, that's right there. Okay, if you want to make the clouds, the shaded area darker or lighter, this is where you change the transparency. If you want to make it lighter, change that to be a different value right there. Okay, if you want to change the color of the dots, you change that right there. The key thing here is this value right there. If you're on a higher time frame and you want to see dots and crosses that go further back in time, you need to change this to here. This basically tells Tradestation to go back for 2 years and get all the 1-minute data up to monthly data up to here. So if you're looking at a weekly or monthly chart and you want to go back for 10 years, you need to change this to 5 or 10 years. Remember, the higher the number you go, the more data it's going to download and the slower it'll be in loading the charts. Okay, so the standard we kept this for is 60 minutes and higher. We kept this to about 2 years. If you're on day trading, like a 5-minute, we set that to about 1 year. So the whole reason why I have these 4 charts there is that they have all the indicators and all the number of years and number of days and everything automatically programmed you, so you could go in and look at all that information. Okay. The other thing is that once you basically have all that information saved, okay, if you want to change the colors and all that stuff, you cannot save it on the indicator. What you need to do is you need to save it as an analysis group. Because reason why is if you had the ELD, the original ELD, then you could sit there and just click on default and automatically change the code. But since it's this Tradestation App Store, when you change any of the parameters in the indicator, what you could do, the only way you could save it is that you have to right mouse click, okay, and then you have to choose Save Analysis Group, okay. When you click on Save Analysis Group, it's going to look like this. Give me 1 sec. It'll look like this. So if I go to Save Analysis Group, I type in a name for the group name, and what it does is it saves all the information that you changed in that indicator and saves it. And then on the next chart, all you do is say Load Analysis Group. So instead of loading the indicator, you're going to load Analysis Group, which has all the changes that you guys have made to that particular indicator. Okay. Now I think I've covered everything in there. The installation goes for all this plus more. If you guys have any questions, you guys could email us. Okay, let me give you the information again. Here's all the information here. So if you want to purchase this indicator, all you do is go here. Oops. Right there. Okay. If you have any questions, you can email us at info@eiicapital.com. Now, we kept the cost low, so the support is via email. Okay. And typically response times are anywhere from 1 to 3 days. If it's urgent, then we get back to you right away, as long as there's not a backlog. If there's no backlog, we get back to you right away. But we get a lot of people buying this platform here, the indicator from us. So we want to make sure that we keep this cost low. That's one of the reasons why we have email support. You shouldn't need much support at all. Once it's installed, it should be ready to go. And you guys could sit there and you have access to all the videos here. You could go to YouTube or any of our social media. There's tons of video tutorials there. Once you sign up for the indicator, we'll send you tons of video tutorials too. So all the tutorials are via video, not documentation, but via video. And then you can keep on watching us on social media for trades and stuff like that going forward. Okay. So let me go through some of the questions. Okay, adjust the 4 charts. Try turning off the drag button. John, I tried all that. Unfortunately, GoToWebinar didn't allow me to do that, so I had to do snapshots. Do we have a video that goes for how to use the IMTF so you can watch it over a few times? So in this video, we kind of go on through a lot on how to use the IMTF. There's other videos that you'll get on the IMTF, and also, as I mentioned, social media and the blogs. We're continuously blogging how to use this indicator every day because we're entering trades every day. So when we're entering trades, we're blogging them too, so you guys could see real time what we're trading and how we're trading and how we're using the indicator and so forth. But this video goes through a lot, believe it or not, and how to use the indicator with the existing system or with Ichimoku or within by itself, and how you could be successful with it. If you upgrades. So the question is this price locked in for upgrades? So John, this is a yearly subscription. There's no charges for upgrades. You automatically will get upgrades as long as you have that yearly subscription there. We're keeping it short and simple. Remember, we're traders. We don't want to get a support nightmare at all. This key is to basically let you guys have institutional power as a retail trader at a low cost, but we don't want to get into support nightmare. Okay, so we're keeping it short and simple. Once you purchase the indicator, as long as it renews on a yearly basis, you'll get all the upgrades and so forth to this particular indicator moving forward. In the future, we will be releasing other little small indicators with this, which are optimized versions and stuff like that too. So the next one I think we're planning is more counter trend or trend continuation, which will shade in areas for that and so forth. Any other questions, guys? Remember, this should be simple. Give you an idea. My 8-year-old son is using this now. All he looks for is shaded areas and basically goes on the blue dots. That's it. We're on social media. Andrew, if you just go to ichimokutrade.com and look at the top, you'll see all our social media icons there. Literally, we're on every social media now. I've had to learn how to do that. So from YouTube to Facebook to Instagram to Twitter to everything. So, learn how to do all the social media. Any other questions you guys have? Could you do something with trend lines, for instance? What are you looking for, John? John had a question. Says, you did something for support resistance. Can you do something for trend lines, for instance? What are you looking for? Not quite sure. Well, trend lines with MTFs really, that's hard to do, John, and program it. The whole reason why we could do the support resistance is because of the way support resistances work in the Ichimoku world. With trend lines, they vary, and it's subjective because you could draw from pivot highs, pivot lows. You could draw from the closing prices of one pivot high and pivot low. And the problem comes down to is that when you have a consolidation pattern, it could get really ugly. So that's very, very hard to do trend lines with MTFs, especially at different time frame levels. Okay, Brett. So Brett had a question. Can you talk more about the exceptions you should trade outside the shaded area? So Brett, the exceptions were, remember, 1 or 2 bars if the green dots or blue dots are basically at key support resistance levels. It could hit those green dots and bounce off them. So that setup is still valid. What happened was the green dots were sitting on key support resistance values, which the code didn't pick up. Okay, so that's one of the exceptions there. You okay with that? Okay, and then one of the things I talked about is shaded areas, where it fails the shaded area and then breaks out on the next shaded area. Those are things that we specifically look for, and we call those reverse trades or proof trades, where it had proof that basically didn't want to go one way and wanted to go the other way. So we basically go off the concept where one side fails, one sentiment strategy fails, and then basically we'll look for the second strategy to succeed. If it doesn't, that basically means it's going to consolidate until a breakout on a particular strategy occurs. Ron, we will check that out and double check. It should be working. We'll check that after this webinar. If not, for some reason, we'll make sure it's working by tomorrow. I mean, we gave you basically a huge number of ideas how you could use these dots, crosses, and shaded areas, right? I mean, we gave you examples on Fibonacci, Heikin Ashi, and Ichimoku. In the next couple of weeks, you guys are going to see more videos on how you could use this to optimize Bollingers, any other technical system out there. Ron, the shaded area disappears when a breakout. Reason why there's no more setups at all. The setup, you've entered the setup. And remember, the shaded areas are when you could place orders to enter on pullback or breakouts. Once the shaded area is gone, that means the trade is no longer valid for a setup. Yeah, we will email the recording out via email. Yeah, the setup area the shaded area is only for a setup. So the setup right now that we have programmed is basically a pure trend, where we're looking for a brand new trend to occur. So the shaded areas are not for trend continuations or counter trend plays at all. They're more towards pure trending plays, which is pretty much the highest probabilities that you have in a wave pattern, and also give you the best reward risk. Any other questions? Okay, that's a wrap up. I'm going to go ahead and start recording converting the recording. You guys have a good afternoon, good evening, or good morning, wherever you guys are at.